Good morning and welcome to the webinar on USDA export finance for agriculture exports through GSM-102 guarantee program. This webinar is brought to you by the Washington State Department of Agriculture, the Export Finance Center, Export Finance Assistance Center of Washington, and USDA Foreign Agricultural Service. My name is Julie Johnson, and I am the Export Development and Outreach Trade Specialist at the Washington State Department of Agriculture. A few housekeeping items that I would like to share. Please add your questions into the Q&A box. They will be monitored throughout this webinar and answered at the end. Next, this webinar will be recorded and the link will be shared with you along with the slides this afternoon. It will also be posted on WSDA's website on our resource page under Other. Now it is my pleasure to introduce you to Zara Castillo, Director of the Export Finance Assistance Center of Washington.
Great, thanks, Julie. I think my video's on. So good morning, everyone, and thank you again for joining us. So just a quick info of what we do is that we provide free advice to local companies on the basics of how to get paid, or we help figure out different types of financing options that might be available for you. As part of our service, we also do referrals depending on what your need. So for example, it could be to one of our agency partners, a service provider, or a lender. And lastly, we provide free webinar trainings, some of them to feature financing options like today's, and some of them are export technical trainings taught by nationally recognized speakers who are experts in these. So for example, last week, we had an Incoterms 2020 training. We also had an international documentation or how to fill and file them. We had an export readiness training about a month ago, and I usually host an export compliance as well, and so on. These trainings usually have a cost if you as an individual company avail for it, but we received a grant called the STEP grant from SBA. So we're able to cover the costs and offer it to you for free. So after today, I'm planning 2 more trainings this summer, but it's not on our website yet, but we'll be there soon. And speaking of our website, I'm in the process of adding more content on different programs or useful tools available. It's still in progress, but I'm just going to quickly share it because it might be helpful for some of you. Oops. Okay, so if you go to our website at efacw.org and you click on Access to Capital, and this shows some different financing options available or reference for exporters. So I'm still working on it, but I added descriptions in the programs in a way that it could easily be read as a reference and are linked to other further information for the sources. And then if you scroll down, there's more resources available here. I'm still working on it. Some of them are not live, but this one's live, Basic Guide to Exporting. This one's not live yet. The due diligence resources. I'm going to put information on different credit reporting agencies. This one's live already if people look for a customs program, Washington State, and so on. And let me know if there's other things that you're looking for, but I figured to add some resource information here because it's kind of like a helpful tool for both our companies and also myself when people ask for these questions. And since we're on our website, if you go to our events tab, it usually has all our events that are live or in our partners events, but also in the past events. These are some of the events that we've hosted in the past available for you to view at your own time. So just feel free to look through those and let me know if you have any questions. I'm gonna stop sharing real quick my screen here. Okay, so let me introduce today's featured speaker, Colin Bradley, who is the International Trade Specialist at the Foreign Agriculture Service under the U.S. Department of Agriculture, who will talk about their Export Finance Guarantee Program for agriculture commodities. Colin?
Well, wonderful. And thank you both, Zara and Julie, for having me and hosting this event. I'm very happy to be here. Again, my name is Colin Bradley. I'm based out of Washington, D.C., working for the Foreign Agricultural Service. I work for the Credit Programs Division within FAS, and I'm one of the outreach specialists mostly focusing on the Asia region, but for today's presentation, I'll cover for all of them. All right, so I'll talk a little bit more about what we do. I'll just start sharing my screen. Okay. You should be seeing it. Thumbs up. Okay, great. So I'll just get right into it. So before I start talking about GSM and our credit guarantee program, I just kind of wanted to give a broader overview of FAS. I'm not sure if everyone on this call today is familiar with what our agency does. So overall, our mission is supporting exports of US agricultural commodities. This slide just gives a brief overview of all of the US exports of ag commodities throughout the world so far in 2023. It shows some of the biggest markets across the world and some of the opportunities that we hope that you can take advantage of through programs like GSM-102. So FAS, we have offices all over the world, mostly working in embassies in country. We have 90 offices and we cover 165 countries. Some of those countries don't have an office, but they'll have someone nearby in a neighboring country to do that. So that's about half of what our agency does. They're the eyes and ears on the ground in country, and they're a wonderful resource to get information from. And they do a lot of talking with intergovernments and importers in country. So as I said, FAS, we kind of have a lot of stuff that we do. We have some market intelligence and analysis folks. Those ones, they often are the ones releasing what we call the gain reports, a lot, and also reports in country about potential market opportunities. We have some programs for market development, so building out interest for commodities in other countries, and also people working on market access issues. So that's like tariffs and trade barriers. Today, though, we're going to talk a little bit about the trade finance space, and that's where GSM-102 falls under. If you have any questions about any of these other areas, I'll be the first to say I'm not an expert in everything FAS does, but do feel free to shoot me an email and I can find you the right person to talk about some of our other programming with. All right. But this is what you came here for today, our GSM 102 talk. So what is GSM 102? Well, the way I like to think about it is that it's kind of like an insurance program. We're here to lower risk for exporters who want to ship abroad. So I want to state right up front, this isn't really a financing mechanism per se. We don't offer loans or direct financing. Again, we're kind of like insurance. So what we do is we protect the US exporters against the risk of non-payments from importers, or more accurately, the banks that those importers are using to finance these transactions. An important part of our program is that it is letter of credit driven. So the transactions that take place, those do need to be have a letter of credit backing them. So we have credit terms for up to 18 months. I'll talk a little bit more about the details of that as we go on, but all that is to say is that there are different lengths of time that the importer's bank would have to repay you as an exporter. Those range from 6 to 18 months, and there are various different fees associated with that and different considerations you want to take in on those repayment terms. But that's just the length that we offer. Our program is, again, emerging market focused. So we're really trying to lower risk for exporters that are trying to get into potentially new markets. There's a list on our website of all our destination countries that are eligible. And I believe I have a slide later on that talks about that too. But pretty much anywhere that's not Western Europe and a few other miscellaneous countries, we do cover. So it's pretty broad. And a 98% guarantee. So what we mean by that is that we cover up to 98% of the value of your export in case there is a default in payments. So that's, again, we're about lowering risk. So before I bore you with all the details of our programs and some of the steps and the intricacies of it, I just kind of wanted to highlight for you what the benefits are of using GSM 102 rather than just kind of going with a regular export transaction. One of the biggest advantages that we have in our program is what we call assigning a guarantee to a US financial institution. So what do I mean by that? So like I said, we have different terms of repayment. Let's say it's a 12-month repayment for an export. For you, maybe 12 months, that's going to be too long to get your money. You want more upfront and you need cash flow for your business. Under our program, what we allow is that you can work with an approved US bank. Again, they're all listed on the website, and work with them to get your money up front. And then at that point, you would assign the guarantee to that bank. So it's the bank that would be repaid at the end of that tenor. So again, it's a really nice benefit for you all because your risk is essentially zero at that point once you've assigned it to a US financial institution. I have on here some slides for other stakeholders in this transaction that benefit from this. But again, I know this is exporter focused, so I won't go too much into detail on those. All right. So how does a regular GSM-102 transaction work? So an exporter, the first step is an exporter would establish a firm sales contract with a buyer overseas. So that's, you have to work that out first. And then you, the exporter, would apply for a guarantee under our program. I will say that we do charge a guarantee fee, again, kind of like an insurance premium that you would pay up front. We have a whole fee calculator on our website that will show you the fee that we charge. The fee is different. It's based on the destination country and the bank that the importer would be working with. We have to take some risk into account when we charge for a fee, but I will say it's generally pretty small. And you can look at that and kind of calculate for yourselves what that would be for your specific transaction. So moving along, so then the importer, once you've agreed on the sale, the importer needs to go get a letter of credit from a bank that is approved in our program to cover that sale. This is a legally binding mechanism to ensure that payment will occur. At that point, like I said, an exporter has the option to assign the guarantee to a US bank and get that cash, upfront, but it's not mandated. If you want to hold on to that risk for whatever length of time, you're definitely welcome to do that. So the goods are shipped, and and the bank would pay the exporter if the exporter assigned the guarantee. At this point, the foreign bank that provided the importer financing, they will make payments either to the US bank or you, the exporter, directly on the agreed upon payment schedule. If there is a default, that is when USDA would step in and then cover that 98%, like I talked about earlier. And then, of course, the importer has to pay the foreign bank, but those terms are set between the importer and the bank. We don't really get involved with that. And by and large, you shouldn't have to worry about that too much either. So again, that's just sort of the basic mechanisms for this for how a transaction would occur. I'll get into a few more details of what our program talks about. Again, this is a little in the weeds, but it's helpful to know. So again, we're mostly talking about emerging markets. There's over 130 eligible destinations all over the world. For our program is regional based. So what I mean by that is that, let's say you want to export something to Mexico, for example. For the importer, they don't have to use a Mexican bank necessarily to provide a letter of credit for the transaction. They could use a bank anywhere in the Latin America region to do that. And so that provides more flexibility for importers, again, especially in some of these emerging markets that don't have strong banks. This is a good option. In Latin America, for example, often some things will come through Panama or Guatemala, while the importer is in another third-party country. And again, we have lists of all the foreign banks that are approved for each of the region on our website that you can take a look at. Eligible commodities is something I haven't highlighted yet, but I think something that's really cool about GSM-102 is that we don't just focus on bulk commodities. It really can be almost any US agricultural product. I know this year, for example, we've done some wood shipments, beer, wine in the past. Way back in the day, I know we've done a few live cattle. So our definitions are really broad. The only stipulation is that it does have to be a US product. For certain high value products, again, like beer, for example, we do have certain requirements that 90% of the content has to be US based. So if it's, mostly coffee with a little bit of beer in it, that probably won't fly. But by and large, our program is very broad in the definitions. What I'll also say too, along with that, is that we don't have a minimum threshold. We do transactions that are, $10,000, few $1,000s, all the way up to a few $1 million. So don't feel intimidated if you don't feel like you have a big enough shipment. We do it all. So how much does it cost to participate in GSM-102? Like I said, the cost for you is going to be the guarantee fee. Again, that's calculated based on the risk in the destination country and the bank. There's also costs associated with letters of credit, but we don't, as USDA, get involved in that part, and a lot of that is borne by the importer too. Financing costs, again, unfortunately, we're not giving you direct loans. So if you need a loan for this, that's not something that we can provide, and that would have to be something you work out with your bank to figure out. And the last point on this slide, it talks about $5 billion being available each year. So that's the amount of risk that our program is willing to take in each year. So we can cover $5 billion worth of transactions. Each region has a different cap on it, with Latin America being the biggest. I think it's for the whole year, 3.2 billion. I'll say that we almost never run out. So we're always accepting pretty much. All right, so maybe I've sold you on this program. And you're like, okay, well, what are my next steps to get involved here? So the first step, and honestly, this is the hardest part. I will say it's a little bit of work up front, but you have to register on sam.gov. This is just so that we can do our due diligence and make sure that you are actually a US business and that you're not, in any sort of legal trouble and that you're above board. That's just a program requirement. Sometimes sam.gov, they can be fast, they can be slow. So I recommend, it's free to sign up on it. So I recommend just doing it to get that process going. At that point, then you would submit an application to FAS. It's very similar information to what you did on sam.gov, but for paperwork reasons, we do need just a separate application. It's pretty short, and we have staff in DC here that you can give a call if you have any questions on that. As I said earlier, then it gets into that normal GSM-102 transaction where you negotiate the sale. If you want to assign it to a bank, call up a bank that an approved bank in the program to see if they'll be willing to work with you. What I will say is that sometimes, maybe you're currently working with a bank that isn't in our program yet. Definitely, you can encourage them to join us. I have another slide next that talks about some of the paperwork that they would have to complete to do that. But yeah, we always appreciate having new banks in the program, though I think our current list is pretty extensive. And then finally, you'd submit the guarantee fee. So again, if you take nothing else from this slide, really register in sam.gov because that can take a little bit of time. This slide I won't really go through too much, but if you have a bank that's interested, feel free to share this information with them. This is just the list of documents that they would have to provide to USDA to get them signed up in the program. Okay, so I did promise that I would define what our regions are and destinations. So here you can see our 3 regions that are eligible under our program. We have Asia, Latin America, and then the terrible AMTCCA acronym, which is kind of just everything else. But as you can see, it's pretty extensive, the destination countries that we cover. And just for some, context, I talked about, we have up to $5 billion that we can do. Last year, we did $3.3 billion, vast majority going to Latin America. But as the Asia outreach specialist, I want to get our Asia numbers up. So if you have any interest in going there, do let me know. But again, this is just sort of giving you an overview of our program. All right, so I kind of talked through a lot, and I will have time for questions at the end, and I do welcome any. I had my afternoon coffee right before giving this webinar, so I did talk fast. But here are just a few things that I want to go over again. Make sure that you take these away. GSM-102, we ensure exports. It's not just for bulk commodities. We do a wide range of things. The full list is on our website, and it's based on the HS code for the product, but it's very detailed what we can cover, and it's very broad. it's not just, again, it's not, we don't have a minimum transaction size. It can be for any size. And again, we're not just for large companies, though of course we welcome their business. We really do appreciate our small and medium-sized enterprises using this program, because I think honestly it benefits you all the most. The big companies have more wiggle room to take on risk, but we're really here for you to make sure that you're able to export too into some of these destinations that maybe you weren't thinking about before. And again, we're GSM-102 isn't a financing tool. It's not a loan, so we don't charge interest. The only thing that we charge is a guarantee fee, which again is basically a premium for the insurance that we offer. So I did want to end with a bit of a success story that we've had in the past, and a Washington State example in particular. So 2 years ago, in 2022, I'll say, we were working with a U.S. exporter that wanted to sell to Venezuela. In particular, they wanted to sell apples from Washington State into the country. But Venezuela, I mean, there was a little riskier, and they weren't sure about doing business there. So, my team, I won't take full credit for it, but a lot of people on our team worked with the exporter, the importer, and some banks in the region to make sure that they could get this export going. And the exporter was able to ship their apples under GSM-102. They felt comfortable doing that, knowing that they would get paid at the end of the day. And I want to say this was the first sale to Venezuela in a long time, since the sanctions went in 2018 about. So we were, or 2019, I'm sorry. So we were very happy to get this there. But again, this just goes to show that our program, it gives you the ability to ship to some markets that maybe you weren't considering before. So we do want to promote that. Okay. These are just some of the potential opportunity type things you might want to think about when using our program. Again, we're here to lower risk for you. And if you have any questions about what markets you could get into with this or anything like that, please do let us know. We're always here to provide assistance to you. So again, that was a bit of a whirlwind. I have some links here in my slideshow that you can use that talk about our different financial institutions, commodities, fee calculator. And again, our generic website, we have a lot of information on there, and I'm happy to answer any questions as well. So again, thank you very much for your time. And now I'll answer any questions. I can't see the chat right now. I think I'll stop sharing, but
I can go ahead. I'm going to go ahead and read the questions.
Yeah, please do.
For you. Okay, so the first question is, would a solar container used to store agricultural products be eligible?
So a solar container. So GSM-102 is purely for ag commodities. So no, but so we do have this other program that I didn't talk about today, but we have a program called Facility Guarantee Program, FGP. And I'm going to stop sharing my screen so I can see a little bit. Yeah, so FGP. So that program, it's very similar. It's basically an insurance-like program, letter of credit based. But in that case, it's for the export of US products related to agriculture. The idea behind it, I think when it was originally envisioned, the idea for it was like, oh, we could improve some port infrastructures in other countries, and then that would increase US exports to that country because they'd be able to process it, whatever. So we scaled that back a little bit, so you don't have to be doing a whole port project. It could be some equipment like that, for example. I'll say that process is a little more complicated, just some of the regulations around it. But if you have questions about that, shoot me an email and I can provide you more information specific to that, because that could be something that falls under FGP.
Okay, and to remind, everyone will get a copy of today's presentation, so you'll have access to Colin's email address too. And then next question is, if the importer defaults, who pays the 2%, the exporter or the assigned bank?
Who pays the 2%? I mean, at that point, the 2% is lost. So that's like that's kind of your skin in the game. Yeah. So
And then another question, can the GSM fee be covered by any exporting insurance tool, etc.?
can the fee be covered? I'm not sure on that I understand the question. I could get back on that. Yeah.
So I'm also thinking export insurance tool.
Pretty much GSM-102, we are the expert.
Right.
We kind of are the insurance tool. If you're saying, you know, as part of your loan, like if you're getting financing from a bank for something, could that be part of it? I mean,
It
I
could
think
be
as long as we
depending,
get the fee.
right. And so Colin, my question is, are the fees, I know it depends, right? Depends on the country, it depends on the region, and depends on the bank of the importer. Are the fees usually pretty high? Like, would it be like more than 10 grand?
I don't think so. No, for a small shipment, no. I think I can actually, if you know, we have the technology, I'll pull up the fee calculator now and share that just so people kind of get an idea. So let me reshare my screen.
So while you're pulling that up, the reason I ask, because if people in the call right now are ready with that and figure out the fees, I can ask our STEP grant manager if the fees could be covered by the export voucher, because I know in certain export products, there are certain fees that could be covered. And so we can double check and see if that is something that we could apply towards too.
Yeah, that would be great. Because the answer to that is I don't know. But yeah, so this,
yeah, oh, go ahead, sorry.
yeah, of course. I mean, I'll just run through the fee calculator really quickly. So where do we want to export to? Let's say we want to go to the Philippines and we'll use BDO Bank. I don't know. So the fees are generated here, and you can see it depends on the repayment plan. So either every semi-annual or annual, and then the length of repayment term. And this is per $100 of guaranteed value. So if you want to do a 12-month tenor with semi-annual payments, it would be 0.309 per $100. So someone that's better at math than me. So I guess if it's $100,000, right, that would be $309. I did math right.
Yeah, so no, but it's, yeah, definitely, that's great to see, right, live. And it's very minimal. So because I was thinking, for example, if someone applies for the export credit insurance, and of course the fees vary, but it could be as little as 65 cents per $100. And so it'd be like $65 for a $10,000 shipment. And I know for this year that the STEP Grant Export Voucher Program could cover that fee for Exim Bank if someone had applied for that. So, okay, so please let us know if you guys have additional questions, type in the Q&A box. I have another question here. If I'm interested in using GSM 102, knowing that my products and country of export qualify for the program, so they already double check and did their own due diligence, is the first thing I need to do is to fill out the online export qualification form, and how long does it usually take to hear back?
Yeah, of course. So the first thing you need to do is the sam.gov business registration. That time, it really depends on them. USDA, we don't control their portal, so we can't guarantee you anything. In my experience, generally it takes maybe a week at most. They're pretty good. Then at that point, you would fill out the exporter qualification application with us, and we work to get that back, 2 weeks at most, maybe 3 if we're really busy. We try and get that done as quickly as possible. And in certain cases, I can't make any promises, but in certain cases, we can try and push that along since that's an in-house process. So again, both of those, sam.gov and the application, completely free. And then once you're in the system, then you're ready to go for, if and when you have a shipment that needs to get out.
I think you've mentioned this already, but is the program a direct loan, or does guarantee mean that you will guarantee my loan through my bank?
Yeah, so it's not a loan. All we're doing is guaranteeing payment in case the importer / their bank really, if they default on payment for an export. So we just cover that one transaction up to that 98% value.
And then is there a list of banks that are qualified lenders under your program?
Yes, so we have lists of US financial institutions that the guarantee could be assigned to. And then we do have lists for the foreign financial institutions for each region. Both of those links are in the PowerPoint and can be accessed there.
Okay, so, and then here's a question. After the US exporter receives the LC, the letter of credit,
Mhm.
how soon can exporter transfer the LC to the bank to get paid? Is there a bank fee at this point?
So how soon can they do it? I mean, I'll be honest, work with the bank as early as you can in the transaction. I don't think we have a regulatory anything about how fast that has to take place. I can double check though on that. In terms of a fee charged by the US financial institution, they could talk with them about that. Again, the earlier you can engage and know these fees that a bank may charge, the sooner you can kind of incorporate that into your pricing.
So would you, yeah, so I think in this case, it really depends on your bank itself. It's not into their hands, not into the USDA's hands.
Right.
Another question, if one company has been qualified for the GSM program, but another one hasn't, can those two companies partner to use the GSM guarantee?
So I'm assuming this means two US companies.
Yes.
So the company that's the exporter of record is the one that we can guarantee. So if two companies want to make some sort of side deal outside of our program, I mean, that's not something we can control, but really it's the exporter of record needs to be the one that's applying for the guarantee with us.
And then is there a place I can double check if my product is eligible for the program?
Yes, that is one of the links that I'll send around. Again, we're pretty expansive in what we consider an ag product. So.
Okay, and then here's another question. We were a GSM-102 approved long ago. Do we need to renew every year?
Ooh, that's a good question. If it was a long time ago, you probably are going to have to re-up it. Because I know the SAM.gov thing, you do have to renew every year. And I think you go inactive in GSM-102, I want to say, is it every 3 years? Basically, yeah, you do have to renew periodically. I don't remember how many years it is off the top of my head, but if it's been definitely over 3, you're going to have to renew.
Or also they could double check, like if they send an email to either their
previous
contact to you can
email us. Yeah, that's exactly right. Sorry, thank you for bringing that up. Yeah, email us first and we can double check your registration status. And then if you have to renew, then we can get you set up there.
Okay. And then a question regarding, you had that slide with the apples earlier.
Yes.
And so they sold the apples to Venezuela. And so would you say that that's an example where the importer's bank doesn't have to be necessarily from that specific country? It could be a bank from that region. Is that one of
that is 100% correct? Yeah, for some obvious reasons, we can't do business with Venezuelan banks. But yeah, they used a third-party bank. I want to say in Panama, but yeah, that's a perfect example of the importer can use a bank anywhere in the region to finance their transaction.
Great. And so I've ran out of questions from our attendees. I mean, you've answered a lot of questions and really great answers, very helpful. And I'm gonna give maybe like 30 more seconds to see if anyone else have any questions. Please type it in the Q&A box. Julie, do you have anything to say?
I don't think so. If there's no more questions, I mean, I want to thank Colin. This is really great information for our companies. Again, we're going to post it on our website probably in the next few days. And thank you for your time this morning. Oh, looks like there's one
Right.
more question.
There's one question, is the Bahamas covered?
Ooh, as a destination, you know what? I'm going to check that right now for you since we have a little bit of time. I want to say off the top of my head, yes, but let's double check. Again, like this is all information on our website. But yeah, I will double check for you right now.
We're loading.
We're loading, that's right. All right, that would be in Latin America.
So just to follow up what Julie said, thank you everyone for coming while Colin is looking this up. And aside from the recording will be available on her website, we'll also put it on our website, but also we'll send you a copy of the link along with Colin's presentation and all helpful links for that as well.
And to the person who asked, yes, the Bahamas is an eligible destination.
Is an eligible.
It is.
Okay, perfect. Then let's see. Thank you for this webinar. Perfect. And I think that's it. Well, thank you everyone for giving us your time, but we are giving 9 minutes back of your time today.
Thank you.
Thank you.